Happy Sat Stack and Saturday, and welcome everyone to No One Daily Bitcoin Pod. In today's show, I'll be sharing the latest Bitcoin technical analysis. Also, Bitcoin supply shock incoming, as the Bitcoin supply in the exchanges has been in a literal free fall since the election. Supply has never dropped so hard, so fast, and this is unprecedented, has never happened before. We'll also be discussing the Bitcoin ETFs on $3 billion bender, logged the first full week worth of inflows in the past 5 weeks. Bullish. We'll also be discussing Deloitte predicts 4 trillion tokenized real estate on the blockchain by 2035 within the next decade. Also, Saylor Scientific buys another 10 million worth of the biddy. We'll also be discussing Bitcoiner Jack Mallers vows not to let 21 distract from strike. We'll also be discussing Michael Saylor says we'll just keep buying, and if I'm lucky enough, we'll get 10% of the Bitcoin supply, and then Bitcoin's going to go straight to 50 million per coin. Ultimately meaning he does not plan to stop, whether it's at 5%, 7.5%, not even at 10%. The strategy is simple: accumulate forever, Laura. I'll also be sharing the latest updates from the Bitcoin OG, Adam Back. All this, plus so much more in today's show. If you're new to the channel, important to smash the likes. Go ahead, subscribe, then ring the bell. Turn on all notifications to receive daily premium crypto newsletters every single day, including Sat Stack and Saturdays, just like this. Today is pod episode 1974. We're 26 episodes away from the coveted episode number 2000. I can't wait. Making us the number one most consistent, number one daily Bitcoin pod. Hands down. Today is April 26, 2025. Happy Sat Stack and Saturday. Let's kick it off with our market watch, as we do each and every day. And as you can see on your screen, we got the pretty little bitty correcting. Yesterday we were above 95. We're maintaining today above 94.4. Let's see if we can continue the week's bullish momentum as we have been pumping. Remember, maybe a week and a half ago, we touched the bottom at 74. We're 20,000 already above that, and fast approaching 100K. We have Ether in the green, but barely. XRP in the green, BNB all in the green, but barely. Solana, Cardano, and Sui correcting. And checking out the infamous coinmarketcap.com. The current crypto market cap almost back at 3 trillion today, 2.96 trillion. Biddy market cap just shy of 1.9 trillion. Volume 67 billion in the past 24 hours, down 37% on the day. Now the Bitcoin dominance is 63.3% with the Ether dominance at 7.4%. How high do you think the Bitcoin dom will climb for the cycle? And do you think the Ether dominance will continue to make new lows? Let me know your thoughts. And checking out top 100 crypto gainers past 24 hours. We have Brett up 22%, WorldCoin up 18%, and Virtual up 15%. Let me know which alts you're bullish on for the bull. Holla. And checking out the crypto bubbles. We get a visual perspective on the day. And as you can see, actually, I'd say the majority of the market in the green, maybe 60-40 green over red. Zooming out some for the weekly. This is nice. Maybe 90% of the market in the green. We like to see that. However, you need some humble pie. Put things into perspective. Past 30 days, still the bulk of the market in the red, even though there are some impressive gainers like Fartcoin up 85% on the month. Brettcoin up 90%. And yeah, I mean, those are the tops. And checking out the crypto greed and fear index. Today we're 65 greed. Yesterday at 60. Last week at 32. And last month at 40 in fear. And checking out the infamous time chain calendar. We have 155,921 blocks to the next halving of 2028. Approximately every 10 minutes we get a new block, tick-tock. And we're currently on block height 894,079. And you can currently, at today's exchange rate, exchange one fiat monopoly dollar for 1,061 sats. So you know what to do. Pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Let's dive into today's TA, aka astrology for the broskies. Headline here reads, and we'll also pull up some of the live charts. Bitcoin spikes to a 7-week high as analysts doubt chances of a $100,000 rebound. Jeez Louise. Here you're looking at a 1-hour chart. You can see big green bullish momentum building. Trading view showed Bitcoin hitting a 7-week high above 95. We were above 95 shortly ago and corrected a little bit since, having preserved this yearly open at 93.5 as intraday support. Bitcoin went on, liquidated leveraged shorts as the 100,000 came closer. The latest data from CoinGlass showed progress in taking upside liquidity across the exchange order books. You're looking at the 24-hour Bitcoin liquidation heat map right here. React and Dan Crypto Trade shared that trading back above the bull market support band as we speak. A weekly close above this level would be a good look for the larger time frame, and I'd expect new highs at some point as long as it holds above. So ultimately, as long as we hold above the current level, we're likely to keep inching higher and higher towards 100,000. Now, SKU Analytics price would be a lot lower than it is now without the passive buyer matching the market selling. Eventually, one will throw in the towel and volatility will follow through. Well, the Bitcoin is down for the cause, never down for the count. I just want to throw that out there. Meanwhile, Keith Allen, regarding 100,000 target, says, for me, pump above 95 would invalidate the news signal, but I'd probably consider such a move to be a short squeeze unless we have a catalyst with some substance behind it. Meanwhile, macroeconomic perspectives from QCP Capital shared, given the pace of the recent rally, we remain tactically cautious. Positioning has become more crowded, which could lead to the sharper reactions around the key levels. Market participants appear to be watching closely for the signs of continuation or exhaustion. And in some breaking news here, pointed out by the Bitcoin therapist, check this out. Bitcoin supply on the exchanges has been in a literal free fall since the election. I mean, charts don't lie. Supply has never dropped so hard and so fast. This has never happened since the inception of the Genesis block. Who can you say? Supply shock incoming. I also want to share with you the craziest chart in all of crypto. If true, Bitcoin to hit 220,000 by July, and as the Bitcoin / US dollar chart, it shows you the global M2 money supply, and it shows Bitcoin soaring to 220,000 here within the next few months, particularly in July. Do you think we can get a 220,000 bitty price action as soon as July? Yay, nay? Holla at your boy. Let me know, and let's pull up some of the live charts for the broskies, of course. And again, happy 420 for everyone joining us. You should be able to see live and on your screen. This is the TradingView Coinbase chart. It shows the bullish pennant. We do have a bull scenario target in the green, sitting just shy of 103. It's a bull pennant, which will take us within striking distance to price discovery, which was achieved on Jan 20th of 109.3, which is the current all-time high. And zooming out from here, we'll work our way backwards just a little bit. And checking out the 4-hour chart. Shows you rising wedge formation, bullish. We do have a bear target, though, sitting at 86,228. And zooming out from there as we continue to work our way backwards, we take a look at the daily. And as you can see, for the week, we had a lot of green consecutive daily candles. 1, 2, 3, 4, 5, 6, 7. 7 green consecutive days, which is nice before the corrective red we're seeing on the screen right now. We still have a bull target in the red on the daily, which would take us to price discovery. 111. I should say just shy of really 112, and going down, bear scenario 49,000, and we'll work our way backwards here, and that's super bear scenario, by the way. Checking out the 1 weekly, as you can see, big weekly candle form. We do get the close for the week officially tomorrow, but thus far it's been the biggest weekly candle close we've seen in a hot minute. Remember, we bottomed at 74 and we're at 94, so we're up more than 20,000 from the local current bottom. And also the cup and handle target still in play in the red. You can see at 124,000 per preload biddy, going up forever Laura. And zooming out a little further from there, we take a look at the monthly, and the monthly ends, we're going up forever JV. Big green candle forming for the month of April. We like to see, especially considered past couple of months have been bearish red monthly closes. And if you don't know, now you know. There you have it. Next story of the day. Now we got the TA out of the way. Next headline reads, Bitcoin ETFs on $3 billion bender, logging the first full week of inflows in the past 5 weeks. That's right. Spot Bitcoin ETFs in the United States, over $3 billion of inflows this week. We're so back, marking the first full week of consecutive inflows for the past 5 weeks. On April 5th, the 11 spot ETF saw 380 million of inflows, bringing the total for the week to around just above 3 billion over 5 consecutive inflow days. According to Farside, the last time the spot Bitcoin ETFs had a full week of inflow days was the trading week ending in March 21st. ETF analyst Eric Balchunas said in an April 24th post, ETFs are on a Bitcoin bender. What's really notable here is just how fast the flows can go from first gear to fifth gear. Precisely. Forecasting that some of those flows may be due to the basis trade back in effect. As the Satoshi Stacker points out here, TradFi accumulated $3 billion plus of the pre-low bidding over the past week. All it took was a single week of strong ETF inflows to push the pre-low bidding from 85 to 95, which is ultimately a god candle. And amid the ongoing macroeconomic uncertainty, spot Bitcoin ETFs have experienced a volatile April, with 9 out of the 18 trading days so far being outflows. However, strong surge of the inflows over the past week turned into a positive month, bringing the total net inflows for April to approximately 2.26 billion US dollars. On the same day, strategy founder, the GigaChat, Mikey Saylor, reportedly said at the Bitwise Invest Bitcoin Corporation's Investor Day that BlackRock's iShare Bitcoin ETF will be the biggest ETF in the world in 10 years. Let that sink in. I think it'll happen even sooner. And just 2 days prior, BlackRock's IBIT was awarded the best new ETF at the annual ETF.com ETF Awards. Who knew? I'm familiar with the Grammys, the Oscars. I didn't realize there were ETF awards. Go figure. IBIT was also the recipient for the Crypto ETP of the Year, exchange traded product. Meanwhile, Bitcoin spot price continues to hover at this time between 94 and 95 at a time of a live stream. And billion-dollar asset management giant ARK Invest recently raised this bull case scenario, which we discussed that as our feature story yesterday. So if you missed yesterday's pod, I encourage you to check it out. So Cathie Wood's ARK Invest up their bull scenario to 2.4 million within the next 5 years by the year 2030, as Bitcoin's increasing acceptance as digital gold by the institutional investors. We call that institutional FOMO, like a mofo. And not only that, they also raised their base case and bear scenarios. So for example, the new bear scenario for Cathie Wood's ARK Invest is $500,000 per biddy, and the new base case is 1.2 million. Now, JV's personal projection slash prediction for this particular cycle peak, my base case is 420,000. So now you can say Cathie Wood's more bullish than I. But then again, this is Cathie Wood's prediction is by the year the following cycle, which would be 2030, as this cycle would be ended in 2028 by the time of the next halving. So just for some clarity. And my bear scenario for this year is 222,000. JV's bull scenario is 1.1 million. Max Kaiser's bull scenario is 2.2 million. We also have people like Samson Mao and Adam Back calling for a potential $1 million per coin here. But you guys let me know your thoughts and read your comments out loud. Welcome everyone to the live stream. We still got a lot to share for the Biddy Broskies and the Biddy Baddies for holding it down with gold by the pound. So yeah, as it says here, Deloitte predicts a 4 trillion tokenized real estate on the blockchain within the next decade by the year 2035. So let's break down this next story. Over 4 trillion worth of real estate could be tokenized on the blockchain networks during the next decade, potentially offering investors greater access to property ownership opportunities. According to the latest report, the Deloitte, and hopefully I'm pronouncing Deloitte even correct, I have no idea. But anyways, the Deloitte Center for Financial Services predicts that over 4 trillion worth of real estate may be tokenized by the year 2035, up from less than 300 billion last year, 2024. The report published April 24th estimates a compound annual growth rate of more than 27%. The 4 trillion of the tokenized property is predicted to stem from the benefits of the blockchain-based assets, as well as a structural shift across real estate and property ownership. And here on the figure on your screen, you can see the global tokenized real estate value is expected to hit 4 trillion, and you can see how fast it's expected to rise. In 2025, you can see the slow growth leading up, and then, I mean, it just starts to really ramp up as we get past 2030. But quoting them here, real estate itself is undergoing transformation. Post-pandemic work-from-home trends, climate risks, if that's such a thing, and digitization have reshaped property fundamentals. Office buildings are being repurposed into AI centers. Logistic hubs are energy efficient residential communities. Investors want targeted access to these modern use cases, and tokenization enables programmable, customizable exposure to such evolving asset profiles. The uncertainty triggered by President Trump's import tariffs boosted investor interest in the real world assets tokenization sector, which involves minting financial products and tangible assets on the blockchain. Both stablecoins and real-world assets have attracted significant capital as safe haven assets amid the global trade concerns. The tariff concerns also led tokenized gold volume to surpass $1 billion in trading volume April 10th, the highest level since March of 2023, when the U.S. banking crisis saw the sudden collapse of Silicon Valley Bank and the voluntary liquidation of Silvergate, etc. Growing real-world asset adoption may inspire a more welcoming stance from the global regulators, quoting them here. While regulation is a hurdle, regulation follows usage. Tokenization is similar. As demand increases, regulatory clarity will follow. He also added that making tokenized products compliant with a wide range of international regulations is the key to unlocking the broader market access. However, some industry watchers are skeptical about the benefits introduced by the tokenized real estate. Quoting someone here from Paris Blockchain Week, Michael Sonnenschein, he says, I don't think tokenization should have its eyes directly set on real estate. Let me know if you agree. I am sure there are all kinds of efficiencies that can be unlocked using blockchain tech to eliminate the middleman, escrow, and all kinds of things similar to the real estate. But I think today what the on-chain economy is demanding are more liquid assets. So there you have it. 10 more million worth of the biddy. The healthcare company increased the Bitcoin yield by 23.5% year to date. Bring it. The company purchased 111 Bitcoin. That's a good omen. For 10 million. That's a sexy blackjack, baby. At an average price of roughly 90 G's per biddy. Semler said it holds a total of more than 3,300 of the biddy, worth approximately 300 million in aggregate. Semler said the biddy purchases have earned stockholders a Bitcoin yield of 23.5% year to date. Bitcoin yield measures the ratio of the Bitcoin holdings to the outstanding shares, reflecting the growing exposure per share per investors. And let me know if you guys can see the screen clearly. I'm just making sure we're not frozen or nothing. Let me know in the comments. Semler Scientific uses the Bitcoin yield as a key performance indicator to help assess performance of the strategy of acquiring Bitcoin as a manner Semler Scientific believes is accretive to the stockholders, as per their CEO right here, Eric Semler. Right on. The company said it acquired its Bitcoin treasury for an average price of 89 G's. And as of April 25th, the Bitcoin trades at 95,000 per biddy, according to the data. The data never lies. Semler Scientific is a healthcare tech company that develops and sells the medical diagnostic products with a primary focus on detecting chronic diseases. Someone say chronic? Yes, please. Light it up. Happy 420, broski. The company has partially financed the Bitcoin purchase by issuing roughly $125 million in the new stock. It says Semler also announced plans to raise $75 million through a private offering of convertible senior notes in January. That's right. Corporate Bitcoin buying, baby, on steroids. In 2024, the Bitcoin surging price pushed by Mikey Saylor's strategy, formerly known as MicroStrategy, but ain't nothing micro about his strategy, up more than 350% according to the data, and strategy success has inspired dozens of other companies, such as Semler, to start accumulating the pre-low biddy in their treasuries. Public companies are now amongst the largest institutional Bitcoin holders, and as of April 25th, corporate Bitcoin holdings are worth approximately $71 billion in aggregate, according to data from the BitcoinTreasuries.net. Strategy is still the largest corporate Bitcoin holder, with a treasury worth more than $50 billion. And during the week of April 14th, Strategy bagged another 6,556 biddies for an average price of $84,700 per coin. Amongst the institutional buyers, corporate treasuries still lag the ETFs, which cumulatively hold approximately $110 billion. That's another sexy blackjack. And Bitcoin as of April 25th, according to the latest data from CoinGlass. And if you don't know, now you know. But anyways, next story of the day, headline reads, Bitcoiner Jack Mallers, the Strike CEO, vows not to let the 21 distract from Strike. That's right. Strike CEO Mr. Mallers says his new role as CEO of the Bitcoin treasury firm 21 Capital, which is a Bitcoin acquisition company, first and foremost, won't distract from heading Strike, revealing the platform processed over $6 billion alone last year. Quoting him here in a letter to investors, this is not a shift in my commitment. It's an extension of it. Can I get an amen? And we all love our Jack Mallers, don't we? If Bitcoin wins, humanity wins. Every business decision I make starts with one question. Is this good for Bitcoin? 21 exists because I believe it is good for Bitcoin and therefore good for the world. Can I get an amen? Mallers explained that Strike, the Bitcoin payment platform, and the 21 Capital have different goals. He says Strike focuses on making Bitcoin accessible globally, while 21 aims to increase Bitcoin ownership per share and pioneer the Bitcoin native financial tools. These are separate companies, but they share the same ethos. Bitcoin wins, we win. Can I get an amen? as he shares here. This is the letter I sent to the Strike investors. I built my life around one principle. If Bitcoin wins, humanity wins. If we can fix the money, we can fix the world. Can I get an amen? And this comes after 21 Capital announced a launch on April 23rd with the backing of Tether, SoftBank, and Cantor Fitzgerald. So they're backed by $1 billion companies. This is a big deal. The firm is looking to challenge Mikey Saylor's strategy to become the superior vehicle for investors seeking capital-efficient Bitcoin exposure. It's revealed its plans to launch with 42,000 of the pretty little bitty, 42,000 of the bitty, and that's just the start. Mahler shared key metrics for Strike publicly for the first time, and Saylor's congratulating him because he's welcoming the game theory. So smart man. Mahler shared his key metrics for Strike publicly for the first time, revealing in 2024 the firm posted over $6 billion in volume, recorded 600% year-on-year growth, maintained 85% gross profit margin, and reported zero customer acquisition costs. Wow, that's phenomenal. Mahler said that despite maintaining a team of 75 employees, the company expects to generate 8 to 9 figures profit just this year. More power to him, man. He's crushing it. Several crypto enthusiasts have taken to social media, asked how the logistics would work for Mahler's being the CEO of Strike and 21 Capital. A commentator, Alex, asked, what will be the fate of Strike? New incoming CEO, or will he pull an Elon Musk? Similarly, another person asked, who will be the running Strike? Meanwhile, several crypto, and we already got the answer from Jack Mahler, so nothing's going to change. Several crypto industry participants publicly speculated 21 Capital may acquire Strike in the future, ultimately projecting them to become the dominant company. Swan Bitcoin CEO Clipston said it is probably safe to assume the company will acquire Strike. Let me know if you agree. Another person said, how long before 21 acquires Strike? However, neither Mahler's or Strike has indicated any intention of doing so. But there you have it. Now for our feature story of the day. Michael Saylor is not letting up. Quoting him here from a recent interview. We'll just keep buying. And if I'm lucky enough to get a hold of 10% of the Bitcoin supply, Bitcoin's going to be 50 million per coin. That's right. So let me break this down for you. And the latest from the Giga Chad. Yeah, I mean, as you know, MicroStrategy was the first publicly traded company to adopt the Bitcoin, for their treasury, and they've been crushing it ever since. And I'm going to read you this thread and some other information, as well as some bonus details from Adam Back, the Bitcoin OG himself. So here, this was posted from Swan. A new Bitcoin giant just launched with 42,000 Bitcoin on day one. And that's the company 21 we touched upon on the previous story. Jack Mahler's is the CEO, and they have the backing of SoftBank, Tether, and Cantor Fitzgerald, all billion-dollar companies. So this is pretty big. And it's taking direct aim at MicroStrategy. But this isn't just a new stock ticker. It's a global alliance with deep incentives to accumulate Bitcoin at scale, meaning its primary purpose is a Bitcoin acquisition company. So as they put here, they're calling it 21, a purpose-built Bitcoin native holding vehicle, no legacy business, no pivot, no distractions, no shitcoinery. It is not a copycat. It is a direct shot at what MicroStrategy created without the corporate baggage. So here we go. Strategy versus 21. 21 says it can move faster, cheaper, and more efficiently than Strategy. But MicroStrategy has something far more powerful, a 5-year head start, deep institutional gravity, and 328,000 of the biddy, the most of any public company on earth. And that's just the hill they're trying to climb. Now, as I mentioned earlier, Saylor's not letting up. I want to read you this particular quote here. And there we are. He says here in the interview, we'll just keep buying. And if I'm lucky enough to get 10% of the Bitcoin supply, Bitcoin's going to hit 50 million per coin. And he doesn't plan to stop. Not at 5%, not at 7.5%, and not at 10%. The strategy is simple: accumulate forever. Why? It's going up forever, Laura. So why does this matter right now? Because the backers of 21 aren't just investors. They're signaling something deeper, a convergence of sovereign capital, offshore dollars, and Wall Street power all aligning around the Bitcoin. Let's take a deeper look. SoftBank, many of you may have never heard of it. Japan's post-crisis capital engine. It funneled suppressed domestic savings into global risk bets like a national carry trade, and is now channeling the capital into the pre-low biddy. And not just for profit, but to reclaim the relevance in the dollar-dominated world. So is this another attack against the dollar? Maybe so. Tether is a workaround to the U.S. monetary control. Like the euro dollar system before it, Tether moves dollars beyond the Fed's reach, providing dollar liquidity without U.S. banking rails. It is not the end game. It is the infrastructure for one, and Bitcoin is the exit. Now, Cantor Fitzgerald, a Wall Street firm run by sitting U.S. Secretary of Commerce, Howard Lutnick. It is the bridge between the regulated finance and the emergent monetary rails. When firms like Cantor start building on Bitcoin, it's not a protest, it's preparation. Look at that handsome gentleman right there. Let's go. MicroStrategy verse 21 is a visible battle, but under the surface, capital is reorganizing. The rules are changing, and Bitcoin is the common denominator. This isn't about one company winning. It's about Bitcoin absorbing everything. In a world where monetary order is unraveling and Bitcoin is emergent as a strategic asset, Bitcoin in DC is where the policy and the finance converge. And there you have it, yo. And now some insights that were posted. This one, I believe, was Adam Back. So yeah, this is actually a pretty good post I'm going to read, but it's a little lengthier, so I'll save that for last. Adam Back said corporate buying will send the Bitcoin market to 100 to 200 trillion. Where do you think that would likely send the Bitcoin price? You let me know in the comments. Most companies will move to a Bitcoin treasury, and we're witnessing that in real time as the game theory continues to play out in real time. So yeah, MicroStrategy and other treasury companies are an arbitrage of the dislocation between the Bitcoin future and today's fiat world. A sustainable and scalable 1 to 200 trillion trade front-running hyper-Bitcoinization, scalable enough for most big listed companies to move to the Bitcoin treasury. And this was reposted by Max Kaiser, shout out the high priest, which caught my attention. He also put the sound of Bitcoin is inevitability. Someone responded, some thoughts behind the 1 to 200 number, or is this more dramatic effect? Adam responded, 2009 Bitcoin addressable market, hyper-Bitcoinization target, buying the biddy or using the treasury strategy to accumulate the biddy, or arbitrage shorting fiat versus the Bitcoin. Now deeper into the spread, the game is rigged for Saylor. Institutional Bitcoin hoarding is a feedback loop that crowns a king. My dearest kitties, allow me to explain the proper implications of the past few developments. Saylor is the apex predator in a liquidity-starved zoo. Every ETF, hedge fund, pension, sovereign wealth fund, practically rushing to get exposure to the biddy is just unwittingly strengthening his position. Ever hear of the land grab? Well, this is the time grab, and Saylor front ran time itself. Pretty deep. Let's dig into the game theory. You can say institutions buying the biddy, but really they're bidding on the float left behind by Saylor's locked-in treasury. The more they buy, the less is available, and the higher the price, supply shock Senate. The higher the price, the more absurd MicroStrategy's embedded Bitcoin becomes. The more absurd it becomes, the more people buy MicroStrategy as a proxy. The more they buy the MicroStrategy, the more the Saylor equity appreciates without selling a single biddy. And the cycle continues like a well-lubricated Ponzi scheme. But instead of collapsing, it ascends to the moon forever, Laura, because it is the one backed by the God's hardest money. Can I get an amen? Saylor's literally becoming the richest man in the world by being the first to buy the ARK and then selling the deck space to panicking billionaires as the fiat flood hits. What a metaphor. He doesn't need to sell the Bitcoin. He monetizes proximity to his Bitcoin. He wields synthetic equity demand like the WMD, the meta capital exploitation. Exploitation, that is. While BlackRock tries to slice up their sad little ETFs, Saylor's running the only public company in the world that's both a tech stock and a monetary regime. He turned the balance sheet illiquidity into the shareholder goal fever. He gamified supply constraints, turned them into a reflexive asset, and now watches Wall Street outbid itself to enter his temple. This ends with MicroStrategy as the most valuable company on the planet, not because it earns anything, but because it has the highest Bitcoin per share ratio in a world where governments are debasing. And whereas Larry Fink's ETF managers need to hedge macro volatility, they'll also be doing buying calls on Saylor's bags. The whole system is being re-architected around him. He's the Federal Reserve chairman of a parallel financial system that prints no money and yet controls trillions of dollars of capital flow. Say it with me. Recursive scarcity followed by synthetic demand followed by exponential monetization equals kingmaker status. MicroStrategy is the proof of work version of the Berkshire Hathaway in a collapsing fiat simulation. That's right, we're living in a simulation. Saylor is the bridge between the capital and eternity, and everyone else is paying the toll. Very powerful post. Let me know if you agree, disagree, and what are your thoughts surrounding the GigaChad projecting accumulating roughly 10 million or I should say 10% of the Bitcoin supply, and sending the preload biddy to over 50 million per coin. Let me know and read your comments out loud. Welcome everyone to the Q&A segment of the live stream.